Welcome back to the channel. Today's video is about how to properly identify whether you're in an uptrending market or a downtrending market. And so for today's video, we're going to jump into my computer. But before we do that, drop a like on the video and we'll get started now. All right, so for this video, we're going to jump inside of my computer and we'll pull up a couple pairs and we will break it down that way. So let me pull up AUD/USD. So AUD/USD on the 15-minute chart, you could see the market looks like it's kind of sporadic, some up here, some down there, some kind of sideways movements. So my first suggestion for you whenever you're trying to get an accurate representation of which way the market is going, you want to jump up a time frame or two depending on which one you're on. I usually suggest the 1 hour or the 4-hour time frame when you're trying to get a sense of what's going on in the market. So the most simple way to be able to identify what type of trend the market is currently in, you want to notice where the highs are and where the lows are. So that's where I usually start. And what is the downtrend consisted of? It's consisted of lower highs and lower lows. So if you look, the market is creating these lower highs and lower lows. As it goes down, you can see it kind of bottoms out here, and then we're kind of starting something else here. So from here to here, this is what will be considered a downtrend. So let's look for another example. Here's another one here for an uptrend. An uptrend is consisted of higher highs and higher lows. You can see it climbing right here. The market was climbing from the bottom to the top. Again, started with this low, then the high, higher low, higher high, higher low, and so on. You see the market and the graph climb from there. So kind of just scrolling back in time, kind of looking at what's going on. And also you'll find some sideways movements, what we call consolidation or a ranging market. So something like this, where there's no obvious highs or lows, kind of market is tennis balling or bouncing in between, up and down between, something like that, with a common high and a common low. So this is, again, what we call consolidation. Ideally, when you're trading, you want to stay away from that. So let's look at one more example on this pair, AUD/USD. And again, even right here, I would consider this consolidation. Pretty common highs and pretty common lows. See market kind of just staying in between here, not moving too much, contraction, and then whenever the market is dropping or climbing, that's called expansion. So let's look at one more pair. Let's go to EUR/USD on the 4-hour chart. Obvious uptrend here. These last couple of days, we had a bull market run all the way up, but before that, we had what? A ranging market, common highs and common lows. The market felt comfortable in between here, and even within this ranging market, there's more ranges. Kind of here, you see market bouncing up and high between this common high and this common low. And one more example, and here is a textbook example of a downtrend. High, low, high, low, and so on and so forth. You see these levels, these structure levels being created as the market breaks to new lows in a downtrend. So this right here, using these little tips on how to accurately identify whether you're in an uptrending market or a downtrending market. First, you want to zoom out to get a more accurate representation of what the market is showing you. So you want to zoom out a time frame or two. I prefer the 1 hour and 4-hour chart, and then keep in mind what an uptrend is made up of. It's made up of higher highs and higher lows, and a downtrend is made up of lower highs and lower lows. So you just want to take note of that, read what the market is giving you, and there you go.